Benjamin Graham and David Dodd wrote Security Analysis, a groundbreaking book that has stood the test of time. First published in 1934, it changed how people invest by introducing a systematic approach to evaluating stocks. It's a comprehensive guide to finding good stocks and making informed investment decisions. The book came out after the 1929 stock market crash, a time when the financial world was in turmoil. People were scared of stocks, having lost fortunes almost overnight. Graham and Dodd offered a better way, a method based on careful analysis and understanding of a company's true value. Before this book, people just followed hunches and bought what was popular without much thought. They often ended up buying what was popular at the time, which wasn't always the best strategy. Graham and Dodd emphasized the importance of doing your homework and conducting thorough research. They said to look at a company's real value, not just its market price. The book is about careful analysis and understanding the fundamentals of a business. It's about understanding a business from the ground up, including its operations and financial health. This approach is called value investing, a strategy that focuses on buying undervalued stocks. Warren Buffett, one of the most successful investors of all time, is a famous proponent of value investing. He learned from Graham himself and has often credited security analysis for shaping his investment philosophy. Security analysis is still important today, offering timeless wisdom for modern investors. It's a classic for a reason, providing a solid foundation for anyone serious about investing. It teaches you how to think for yourself and make informed decisions based on solid analysis. It helps you avoid common mistakes and pitfalls that many investors fall into, making it an invaluable resource. Value investing is simple. Find good companies, buy them at low prices. That's it. But it's not easy. It takes patience and discipline. Value investors are like detectives. They look for clues. Where are the hidden gems? They don't follow the crowd. In fact, they do the opposite. They buy when everyone else is selling. Value investors love bargains. They want to buy $1 for 50 cents. They look at a company's assets, earnings, and dividends. They want to see real value. Value investing is not about getting rich quick. It's about building wealth slowly and steadily. It's a marathon, not a sprint. Margin of safety is key in Graham and Dodd's book. It means buying stocks below their real value. Think of it as a buffer. Imagine a bridge. It can handle more weight than it normally carries. That's its margin of safety. In investing, the margin of safety protects you from mistakes. The market can be irrational. Prices go up and down. But the margin of safety helps you stay calm. You know, you bought your stocks at a discount. Finding the margin of safety takes work. You need to research, analyze financial statements, understand the business. But it's worth it. The margin of safety is your best friend. Graham and Dodd gave us tools for analysis. Their pioneering work laid the foundation for modern fundamental analysis, providing a structured approach to evaluating a company's financial health and potential for growth. These tools help us understand a company's financials. By examining various financial statements, we can gain insights into a company's performance, stability, and future prospects. One tool is the price to earnings (PE) ratio. This ratio compares a company's current share price to its per share earnings offering a quick snapshot of its valuation. The PE ratio tells you how much you pay for every dollar of earnings. A high PE might indicate that the stock is overvalued, while a low PE could suggest it is undervalued. A low PE ratio can mean a stock is undervalued. However, it's important to consider other factors and not rely solely on this metric. Another tool is the debt-to-equity ratio. This ratio measures a company's financial leverage by comparing its total liabilities to its shareholder equity. This ratio shows how much debt a company has. A lower ratio generally indicates a more financially stable company, while a higher ratio can signal potential risk. A high ratio can be risky. Companies with high debt levels may struggle during economic downturns or face higher interest expenses. Graham and Dodd also taught us to look at cash flow. Cash flow analysis helps us understand the liquidity and operational efficiency of a company. Cash flow is the money coming in and going out of a company. Positive cash flow indicates that a company can meet its obligations and invest in growth. Positive cash flow is good. It shows that the company is generating enough revenue to sustain its operations and potentially expand. These are just a few examples. There are many other metrics and ratios that can provide valuable insights into a company's financial health. Security analysis has many more. The book is a treasure trove of techniques and strategies for evaluating investments. The key is to use these tools. Do your homework. Thorough research and analysis are crucial for making informed investment decisions. Don't just rely on someone else's opinion. Develop your own understanding and insights to become a successful investor. Section 5. The proof is in the profits. Success stories of value investing. Warren Buffett is the most famous value investor. His journey in the world of finance is nothing short of legendary. He learned from Graham himself, the father of value investing, who laid down the foundational principles. Buffett is a genius at finding undervalued companies. His keen eye for detail and deep understanding of market dynamics set him apart. He buys them and holds them for the long term, often seeing potential where others do not. Another successful investor is Seth Klarman, who has also made a significant mark in the investment world. He is the founder of the Bopos Group, a highly respected investment firm known for its impressive returns. Klarman is known for his disciplined approach to value investing. He meticulously analyzes every potential investment. He is patient and waits for the right opportunities, never rushing into decisions. There are many more examples of successful value investors who have followed similar paths. These investors all have one thing in common: a commitment to the principles of value investing. They follow the principles of Graham and Dodd. They buy value, seeking investments that are undervalued by the market. They have a margin of safety. They think for themselves, making informed decisions based on thorough research and analysis. Section 6. Bridging the gap. Theory and practice in security analysis. Security analysis is not just a theoretical book, it's a practical guide. It teaches you how to apply the principles of value investing in the real world. The book is full of examples. It shows you how to analyze different types of securities. It also discusses the psychological aspects of investing. Graham and Dodd knew that investing is not just about numbers. It's about psychology too. Investors can be emotional. They can make mistakes. Security analysis helps you avoid these mistakes. Section 7. Timeless Wisdom. Security analysis in the modern investment landscape. The investment world has changed a lot. We have new technologies and financial instruments, but the principles of security analysis are still relevant. Why? Because human nature hasn't changed. Investors still get greedy. They still panic. They still make the same mistakes. Security analysis teaches you to be disciplined. It teaches you to think for yourself. These are timeless lessons. They will always be valuable. Section 8. Beyond the Balance Sheet. The Enduring Lessons of Graham and Dodd. Graham and Dodd taught us more than just how to analyze stocks. They taught us about the importance of patience. Value investing is a long game. Discipline, stick to your principles. Independent thinking, don't follow the crowd. These lessons are just as important today as they were in 1934. The market is full of distractions. There's always a new trend, a new guru, a new hot stock. But the principles of Graham and Dodd remain constant. They are your anchor in a sea of volatility. Section 9. Conclusion. A legacy of value, a future of prudent investing. Security Analysis is a landmark book. It changed the way we think about investing. It gave us the tools and the mindset to succeed in the market. The book's legacy lives on. Value investing is still a powerful strategy. It's a way to build wealth slowly, steadily, and safely. If you want to be a successful investor, read Security Analysis. Study it, learn from it, apply its principles. It might be the best investment you ever make.